everyone.
Yes, thank you, Mohammed. Happy to be here. This is Zeid Husban. Let me go back to the first startup. I co-founded a company called iFood.jo. It's an online food ordering website and mobile application in 2012. It was then acquired by Delivery Hero in 2016 and rebranded to Talabat. Right after, I jumped into the next venture called POS Rocket, also a cloud-based point-of-sale system that targets restaurants. We helped SME restaurants manage their inventory, staffing, reporting, the whole full-fledged ecosystem. And it was then acquired by our biggest competitor, FoodEx, in 2021. Yeah.
Right. We're very happy to have you again, Zaid. You always add really valuable insights to us and everyone on the call. Now, the goal of this event is to go beyond the press release, the social media posts we see, and to try to understand the secret sauce of your success in order to educate again and inspire every entrepreneur on the call. Please, everyone, prepare your questions. We'll try to take them at the end of the call. However, do not keep all of your questions till the end, because what happens usually is a lot of people try to shoot some questions and Zaid won't be able to answer all of them. So whenever you have a question, just put it in the chat and we will try to answer it. All right, with that being said, I want to go back to the start of POS Rocket. Take us to the beginnings. I understand that, of course, iFood added a lot of value. Understanding this specific sector maybe was the inspiration, but what was the aha moment that this is, what led you to start basically a point of sale system, a cloud-based, and you thought that this will be as big as it got?
I think you got the first part correct. iFood was definitely the segue, because we dealt with the restaurants for 4.5 years. And, when you try and start a company, you always try to think of the problem and then try to find a solution. So we had like two main issues with iFood. Issue number one was order transmission. So whenever a customer placed an order, we used to place like a machine, a printer that used to print the order, and then the cashier would take the order and punch it in again into the POS. So now today that device is replaced with a tablet, but still the full operation was actually hefty, because there's a human interaction where they take the order and then punch it in again to the point of sale. So probably you will get wrong orders because it's a human who is taking the order and putting it again in the system. And another challenge was, if you have the wrong order, the cancellation rate will definitely be very, very high. So that was the issue number one. Issue number two was menu updates. So whenever you updated a menu, most of the time you would do it on your POS and forget to do it on iFood. So as a customer, they would order, they have like wrong items, either the price is different or the item is not available. So also this increased the cancellation rate. So we wanted the solution while we were still at iFood. We wanted to integrate with the POS, and it was a nightmare. We couldn't integrate with the POS because all legacy solutions, there's no APIs. So that's where I saw a problem and then thought of the solution, but the solution was definitely already in the market, but not like in the region. We only had two companies, and this is how we decided to jump into POS Rocket.
Right. So I understand that you are familiar. You saw the gap, you saw the problem, and this is definitely the solution. But when was it when you saw that? Let me call it product market fit, or when you realized that yes, we have something here?
So it was definitely challenging at the beginning, because usually restaurants were used to dealing with legacy solutions where they pay upfront and then take the software and then just pay optional service fees per year. So we came with a different model where you pay a subscription, so there is no upfront payment. and you pay a subscription, but this subscription will never end. You have to keep paying. So that by itself, the model was challenging to convince the restaurants that this is a better solution for them. That's number one. Number two as well is when you try to explain, because we did not have the integration from day one. So this is what, like, to solve the issue, this was our vision and I would say mission. But at the beginning, the biggest differentiator, it was cloud versus legacy. And you as a business owner having access to your data from your mobile phone, being able to control your restaurant from the convenience of your mobile phone. This was the biggest differentiator. And also you get a system that keeps enhancing and adapting as well. So that's that's the biggest differentiator. I think the moment where we found out that we have the right product market fit is when your customers renew with you. So they have this subscription. The second that they renew with you, it means that they're seeing value. So I am like, in my, the way I look at product market fit is definitely when customers see value on your product and they're willing to pay for that service or product. So this is when we had like the first batch of customers renewing and we had like a healthy churn rate. This is where we made sure that we have the right product market fit for the segment that we were targeting as well.
So speaking of challenges that every founder in face, whether it's early or on a later stage, there is that stigma about failure in general. And of course, this journey is basically a roller coaster and ups and downs, full of obstacles and so on. I want to fast forward a bit, and you guys are building a solution in the F&B space or restaurant/hospitality space. And COVID hit, and we saw like this is one of the most like sectors that got affected by COVID. At the same time, you were trying to raise a round, which is, I believe, like 10 times or maybe 100 times harder. Walk us through that. How was the process? How did the investors perceive that? Did they say that this is the right thing, or no, it's slowing down? Because no one knows COVID will take like 2 years, 6 months. Just tell us a little bit about that.
So yes, we were in the middle of raising a round. We started raising probably December 2019. So COVID hit in February, March. So we were like maybe 3 months down the road with the investors. So when COVID hit, actually our restaurants saw a drop in their sales more than 90%. So as you said, like this industry was hit so hard. Even in Jordan, they closed down for 40 days, zero revenue. In other countries, they kept opening and closing. So they really were affected. And the investors, honestly, some of them had doubts. Some of them pulled out from the round. And we are in a cash burning business. So if we don't raise that round, maybe the business will shut down, because you cannot pay salaries, you cannot do anything if you don't have cash. So we agreed with the investors that we will take a small hit on the valuation. So because we agreed on a valuation, but then when COVID came, we accounted for that risk. So we actually took a hit on the valuation, around 20% on the valuation that we agreed on. And they did put some milestones that we had to hit for them to release some tranches of the money. So because it was a risky investment for them, we agreed that, okay, let's make sure that, the most important thing is that we need to make sure that the market's recovered. So we did put some KPIs, and based on those KPIs, they will release tranches of the investment. And luckily we closed the deal. It was a tough period, of course, but we closed the deal and we got all the KPIs, and the money came in. Probably also the employees did not know anything about this, so they had no idea that we were going through, because sometimes if you don't have the full picture, you might panic, you might do things that are out of the norm. But we did take a percentage out of their salaries for the like 4 months, and as I think every other startup in the region. And then when the markets recovered again, I think it took for only 4 months. The 5th month it started recovering. We went, and when we raised the round, we went back to normal. So yeah, it was a tough period, but we had to compromise a little bit for us to get the cash.
Yeah, I have 2 questions on that, but the first one, I want to talk about the KPIs. I understand that for any investor, they believe in the mission, they believe in the founder, the vision, and so on, and they want, of course, a return on their investment. So having some sort of KPIs would make them feel a little bit safer, let me say. But what's your thoughts, or what's your take on putting KPIs in a startup, although which definitely any startup should have some KPIs, but these KPIs keep on changing because of a lot of things like market trends and new features and so on. What's your take on it? I'd love to hear it.
So I think here the KPIs were put only for them to be sure that the markets recovered, pre-COVID. So it's not like they wanted growth KPIs, all right? But they wanted KPIs that we put a projection that, okay, where markets will recover in 3 months, this is what will happen 4th, 5th, 6 months. And it was a short period of time. So they just told us like, okay, if you get to this amount during this period, we're okay. This is just a signal that the market recovered pre-COVID. So if you're taking like a normal circumstance and an investor comes and tells you that they need a KPI for them to put the tranches, I don't think that's a good way to take the money from them. Because as I told you, for us it was mainly because there was COVID, mainly because the markets or the situation was not clear, so it was too risky for them. But we needed the cash, so we agreed as well to put those KPIs, and we alhamdulillah, we managed to get those KPIs in the time period given.
Okay. So those KPIs were like fair, founder friendly, and only for them just to make sure things are moving on.
Yeah, exactly, yes.
I wanna circle back to the team. How do you keep the team motivated? Although it's no secret that they know that this is an industry because of COVID, what happened and so on. So how do you keep them motivated and keep building?
Honestly, because COVID almost hit everyone, so it was like a global panic. So it's not like it's only us, it's only PS Rocket. So everyone else was affected. I'm sure they heard their colleagues that some of them lost their jobs, some of them even had worse scenarios than the employees. Alhamdulillah, we managed to keep everyone. We did not let anyone go. But when I expect the employees to also have some respect to the company during the bad days, let's say. So as a family, as a team, we agreed that okay, we will take a hit on our salaries for this period, at least for us to get the money in the bank accounts. So sales was stopped. We tried to be innovative into how we can generate more revenue. We had probably every Thursday we had a meeting just for us to catch up, to make sure that everyone is okay, that no one lost anyone from their family, etc. So it was a very tough time, but we needed to stay close to each other and together. But also it stayed only for 3 to 4 months. So it wasn't like a very long period. So after the 4th month, things started picking up again. We started hitting the numbers again. And we actually, as if COVID never happened, honestly, after 4 or 5 months. So it was like a very short period of time where we stood together. We made sure that we will, go through this together as well.
Amazing, amazing. So COVID is done and business as usual. When did you plan for the exit? And do you think should a founder build a startup with that kind of strategy in mind, or it just comes?
Honestly, Mohammed, I start the company not for the sole purpose of selling it. Okay, so but exit is something that has to happen. Usually venture capital or investors put money with you because they expect an exit at some point in time, whether it's an acquisition, whether it's an IPO, they need to make their money back. So you build a company, a sustainable company, and I think good opportunities will come on the way as well. So if you build the company just to sell it, sometimes you start making sure it looks good from the outside, but from the inside, it's not a sustainable business. So that model, I really don't like. I like to build a sustainable business as if we're continuing. So it's like a 20, 30 years old business that will stay. But then opportunities come. And to answer your question, we had a conversation with the board after we closed the deal. Things went back to normal. So we had to raise another big round after pre-Series B. We had to raise Series B in the next 12 months. And personally, I spoke to all late stage investors. They were either not interested in the business model or they were actually investors in our competitor, FoodEx. So it was maybe a little bit harder for us to be able to raise more money in like the next 12 months. So this is where we decided, let's have a strategy and start talking to strategic investors. Okay, not typical VCs. And we had a list, and I started talking to them. FoodEx was one of them, by the way, but we never approached them. They approached us, luckily at the same time. So we were somehow ready. We were in that phase. They approached us, and then things moved relatively quickly. 6 months from the first phone call until the closing. It took us 6 months.
All right. So, and why you thought that FoodEx is the right acquirer, or because from what I understood is that you had 2 deals on the table. Why you picked FoodEx?
Actually, I had 3 options on the table. So option one, number one was FoodEx. Option number 2 was another company from Nigeria. They wanted to acquire fully the business at a lower valuation, yet it's less riskier because it's full cash. And also we had the option to continue, probably raise another round from a strategic investor, continue growing. So that was an option. I decided to go with FoodEx for multiple reasons. I think when I sat with the team, I felt that there is this sort of chemistry that's there. We share the same vision. Whatever we were thinking about, they have exactly the same strategy for the F&B market, etc. And I also wanted to join a hyper growth startup and be part of the team that will take it to the public market. So they were planning to list the company to go IPO within the next 2 years at that time, but things changed because of the macroeconomics. But at that time, it was clear that they were heading towards IPO in the next 2 years. And I wanted that experience. I wanted to get out of my comfort zone. I've been in Jordan the past 11 years after I graduated from university. And then I want to go to a new country, probably make new connections, be thrown in the middle, get out of my comfort zone. So those are like the main reasons why I was excited more about FoodEx. I thought that the journey is not done yet, and we can do a lot more in the industry and the ecosystem together. So like 1 + 1 = 3, not 1 + 1 = 2.
Amazing. Did you receive any kind of help or guidance from your investors, board of directors, or you were navigating this by your own?
And of course, I had the board of directors that I always had or kept informed of everything that was going. So I did not inform my shareholders or employees when we were at least discussing. I informed them when we had some letter of intent. So once things got serious, I did inform the shareholders and employees. I informed them when we signed, not the shareholder agreement, but when we signed an agreement with FoodEx. So the board, yes, definitely, they were with us. They helped a lot in navigating, but I was, doing all the negotiation, talking to them, and I will just, make sure that we're aligned, me and the board, and then yeah, it was a tough period.
Tell us about this tough period. What was like the top challenges throughout the process of these 6 months, basically?
So you've top challenges is I want to be focused on the business because I don't know that this will go through or not. Yet I want to make sure that this process is going in the right direction. I'm a solo founder, so I had only the board to talk to, and also you need sometimes a co-founder to speak to because they're more involved in the business. Sometimes, you both have exactly the same interest. So I was alone. That was tough as well. Also 6 months, we were burning cash. Cash was gonna run out, so I had to figure out, yes, this will go through or no, it will not go through. So I had to be very, very quick in closing the deal before we run out of cash because I don't want to raise another round. So then I did not want to tell the team as well because I did not want to actually get them distracted. So I kept it again until towards the end. But yes, luckily it went through. And yeah, 6 months, they were tough, but still we managed to go through it.
Amazing. And how did you decide on a fair valuation for everyone? Were there some negotiations, or you guys received like some sort of a proposal and you went with?
So yeah, mainly what we did is first, I wanted to hear from them first. Like I did not want to give them a number, so I made them send an offer. It was very low, and then because the deal was like distributed between cash and shares, so if I want to buy their shares or buy their, I would say, currency, I need to make sure that we have a fair way into evaluating both companies. So I suggested that, guys, since we're in exactly the same business, so we have to do a fair valuation for both companies and use the same exact methodology, which was at that point multiples of revenue. So we agreed that we will have multiples of the annual recurring revenue. And then they got a premium because they were in Saudi, they had like lower churn, they had payment revenue, so things that made sense at that point. So they took a premium on the multiples, but at least it was a fair way to value both companies. So we got into an agreement, into a valuation, and the majority of our shareholders cashed out. So more than 90% cashed out, and the remaining 10%, they decided they want to continue with FoodEx, so they converted their shares into FoodEx. And I personally cashed out a bit of my shares, around 20%, and I kept 80% with FoodEx.
Did the shareholders ask to cash out, or was that like part of the deal that FoodEx proposed?
So the first offer, they offered like 20% cash and 80% conversion into shares. But a lot of my shareholders did not want to convert because they've been in the, for 5 years and they want to cash out. So, I asked FoodEx because the deal was not going to go through if it was 20/80. But they did want to make the deal happen, FoodEx. So they actually approached their investors and they raised a round to close the deal. So to pay our investors the proceeds so they can cash out.
Okay, interesting. So this is a big win, I mean, for all of us. But how did you handle this emotional roller coaster? What was the impact for you? Definitely, because you're building a startup from start, as you mentioned, starting from like an idea, and then you deciding to let that go. What was the emotional impact?
So again, I'm never very attached to the business. I try to convince myself from the beginning. So it's a business. I want to make sure that the outcome is good as well. And I made sure that all employees got offers in FoodEx, so no one was let go, only 2 out of 117. So that was a great number. So they all got offers in FoodEx. And, you know, I thought that we're merging the companies together because this is like sort of, again, trying to think of the win-win. So it's 1 plus 1 equals 3. So it's not like you're selling the company, closing it down, and nothing will continue. That's it, you go home. So that plan was, you know, we merged the teams, we merged the product, we merged the customers, and together we raised the biggest SaaS round in the region, $170 million. And, you know, today FoodEx is the dominant cloud-based point of sale system, over 25,000 customers that they're serving. So all that will make you feel that, okay, at least, you know, you're not closing down and all your effort and hard work will go to nothing. So it's a continuation. It's just like putting your hands together and making a stronger force together. So that was the whole thinking process that I had in mind.
Okay. So the acquisition is done. Now what? What happens? Walk us through what happens after you guys decided and you agreed on a fair valuation for both. You signed all of the agreements. What's next?
So we signed the agreements. It was early 2022. We started first with the employees. As I told you, they interviewed every single employee. We made sure that they have, you know, offers, positions, etc. Not everyone was happy. We had offices in Jordan, Egypt, and Kuwait. FoodEx had offices in Saudi and UAE and Egypt. So I think the biggest challenge was in Egypt. So Jordan, Kuwait was relatively easy. So because we did not have, like, they were not competing with FoodEx there heavily. They had like only 1 or 2 employees. But in Egypt, there was like tough competition between us and FoodEx. So it wasn't the best or easiest, sorry, it wasn't the easiest task to make sure that we merge both offices together. So not everyone got the position they want. Not everyone got the title they want. So, you know, a lot of people, they left after they got the offers. They left to better opportunities, and it was expected. I don't blame them. But also, you know, you have to put yourself in FoodEx shoes. Like, you cannot grant everyone the position and title they need. So we made sure that that is done. Product-wise, we decided that we will continue with the FoodEx product. We took a few small modules from POS Rocket, but again, like, it doesn't make sense to have 2 different products working exactly on the same thing. So we kept FoodEx product. And in terms of customers, we started migrating the customers. This was very challenging, by the way, because FoodEx at that time, they were closing Series C. It was like the year end, so they need to make sure that they're getting their targets and also doing that acquisition. So it wasn't an easy process at all. And also, like, in terms of customers, there wasn't anyone from FoodEx who was somehow accountable and responsible for the migration of customers. So incentives were not very aligned on this. We had a lot of challenges and issues, but it took us a while to actually make sure that the customers are integrated.
Okay, so it was challenging I understand that it was challenging for customers to migrate or to move in from one system to the other, but just tell us what's the main reason for them. I mean, I'm sure they're happy with POS Rocket, but I'm sure also that migrating them will add more value, more features, and so on.
So it's the process that was difficult because they had different processes where they have different prices. The hardware was not the same. We needed to build migration software. So it wasn't like trying to convince the restaurant to convert or to migrate. It was more of like an internal processes that it took so long, and it was very challenging to actually agree on a combined process because we work in a way, they work in a different way. So trying to make sure that, you know, the numbers are correct, doing it right, correctly. Okay, who does the training? How do you do it? It wasn't easy at all. So it took some time, and took around a year and a few months to finalize 4,000 customers to migrate.
Wow. Wow. After the acquisition, you joined FoodEx as a Chief Strategy Officer for, I believe, that specific period, right?
Correct.
Tell us a bit about your role and why did you leave?
So the role was Chief Strategy Officer, as you said. It was more involved in the merger and acquisitions and the M&A department, the PMO, and down the road, I also, the responsibilities got bigger. I took the HR, the people team, the legal team. Honestly, it's more of a personal decision on why I left, and I'll share with you. I left because 2-3 months after I started working with FoodEx, I realized that I'm struggling being an employee again. So after 11 years of operating as a founder, taking the last shots, taking the final decisions in a fast way. So for me, it was very, very challenging to operate in a different dynamic that I don't make the last call, let's put it this way. So for me, it was very, very difficult to adapt, but I thought 2 to 3 months is a short period of time. Let me give myself more time. So I took more time, but then this kept adding up. And I think on like in October, this is where I think for me and for FoodEx, I told Ahmed Zaini, the CEO, that listen, I'm personally struggling being an employee, and I think it's for our best interest, both that if I leave and I, try to make sure I'm still close to the business, I have the majority of my shares are still in the business, but I'm being passive, I'm disengaged, and I don't like being in that position. So that's mainly why I left. And I wanted to take a break, honestly, because I had like 11 years constant 0 days breaks. No, not even 1 day, only like probably 8 vacation. That was like my only off time. So I took a break. I'm currently taking that break. It's been 2 months since I left. And it's a good time to reflect, wind down, spend some time with the family as well, because the past year I was away from the family. So now I'm back in Jordan and hopefully trying to think of, what's the next step. I still don't have anything, by the way, lined up.
Oh, okay. I wanted to ask about that, but you're still on the board.
Yes.
Okay. Speaking of family, this is like an amazing experience, an amazing journey that you did. What is the one thing that you teach your kids about this specific experience? And forget about the cliche stuff like work hard and it would pay off and so on.
No.
Yeah.
No, life is tough. That's the thing that I try to. They're still young, but I try to teach them that you can't take anything for granted. Everything is you can't take it the easy way. So you really need to be resilient and have passion in that thing that you actually do. So if you're not doing it out of passion, trust me, the drive you will give up very, very soon. So you have to make sure that you have a goal, you have passion. So try to work with integrity. That's very, very important, because life will come back at you. So, but yeah, definitely to have more resilience in life, because life is getting more and more like tougher and tougher. So they need to be very, very resilient.
Yeah, 100%. I double click on that. If there's a founder today who approach you and says, listen, Zaid, I have this opportunity about someone who is interested to buy the company or acquire, what would your advice be? Would you tell them sell, hold a bit? What would you tell them?
So there isn't a clear answer. We need to get into the details, what their situation, etc., because every opportunity is different and every case is different. So there isn't one answer, to be very honest. So it really depends on the situation. And of course, if anyone has an offer on the table, let me know. I'll try to help as much as possible.
But on that, what's your thoughts on starting a company in 2003 with the current climate?
I think now is the best time to start a good company. So now we've been through a very weird time where cash was available, it was free, everyone was throwing cash left, right, and center, which wasn't good for the ecosystem, honestly, because probably good founders, good companies, they did not get the right attention that they needed. But now I think good companies with good founders now is the right time, because there is money, there is dry powder, and investors are looking to put in good sustainable businesses. So now, yes, thankfully we are back to focusing on unit economics. So that's we need profitable businesses. So that's that's good.
And what's your take on what happened at Silicon Valley Bank?
Silicon Valley Bank, I think, what they did was definitely wrong, getting themselves into buying very long-term bonds. And I think the inflation and interest rates really, really affected them. And also investing in venture debt for Series A startups, that's very, very risky as well. So, but the panic that happened, it is what actually caused, Silicon Valley Bank to close down. So if, think about it this way, if no one panicked, no one pulled their money out at the same time, would this have ever happened? Definitely no. But everyone panicked, so everyone started, taking their money out, and that's where, I would say, classic way where a bank can definitely fall behind.
Yeah, and I think today is maybe one of the cheapest times and the easiest times actually to start a startup, even with the macro economic and everything that's happening, even with SVB. I want to go back to the acquisition for a bit. What is one thing that you know now you wish you knew before the acquisition?
One thing that I wish I knew before the acquisition.
Yeah.
Probably, I always think about it. Maybe if I pushed more, I did not know how the deal was very important to FoodEx. So I had a lot of leverage that I did not know about. So if I knew that I had that leverage, I could have pushed more. But again, I wouldn't change anything. And I maybe consider ourselves lucky that we managed to get acquired even before all the macroeconomics and all the markets going down. So we did that in a good time.
Yeah, yeah. What excites you these days?
If I'd be blind if I don't tell you generative AI, because what's happening there is really mind-blowing, outstanding, and I think a lot of things will change in the coming 1 to 2 years, and I'm very excited to see what's next. Now ChatGPT 4 is out. It's mind-blowing, honestly, amazing. So I think a lot of innovation will happen around that area. So looking forward.
So are you talking about building a new startup or investing in such startups?
No, I'm talking about the industry in general, like the generative AI. I still did not decide if I want to build a startup or, I did few angel investments, around 6 or 7 so far in different industries. But yeah, now I'm just on the sidelines trying to see, how this will evolve, but it's very, very exciting.
Amazing.
I think it's different than like metaverse and Web3 and all those buzzwords. I think this is real, so it has.
Yeah. My last question, and we'll open Q&A for the last 8 to 10 minutes. So please put them in the chat. Who's keeping the astronaut suit right now?
We left it at FoodEx office, so they have.
Oh.
They put him in the room, locked him up, Rocco.
All right. Well, this was fun.
Thank you so much. Appreciate it.
Please, if you have any questions, just put them in the chat. We'll ask, we'll let Zaid will try to answer them. Looking something in the chat, that's always good to know. Okay. Ilham has a couple of ideas she would like to share with you. Ilham, you can connect with Zaid. Well, I'll put in his LinkedIn right now. Any questions for Zaid?
Is there a social media app you are thinking about investing in? What is the most important metric that you want to see? Honestly, I'm not a big fan of social media apps. I like SaaS, fintech, logistics, food tech. So those are like the things that at least I understand. So not a big fan, sorry.
Any other questions before we end? What's the way I can evaluate my startup in a seed round? A question from Muhammad.
So the way to do evaluation for your startup in a seed round, usually it depends on the traction that you have in the industry that you're in. But I've seen, honestly, from safe rounds, so they're like, it's not a priced valuation. I've seen from 3 to 15 million. It really depends on the team, on the market, on so many aspects. But I'd say the average is seed 3 to 5 million. That's the average that I've seen in the region. And that's also a safe note. So it's not like a priced valuation, because it's very hard to put the valuation. It will be very, very low.
What's your thoughts about the rise of short videos like TikTok, YouTube Shorts, Instagram Reels? Adwan is asking.
They prove to be successful. You know, the attention span of the human being today is very, very, very short. So I personally find it very hard to watch long videos again. So now, like, you know, it's very convenient, very good to see like short videos. But yeah, they prove to be successful. Now that's why everyone you know, implemented it in their social media platforms.
I think Amazon recently launched something or tested something in that space.
I will not be surprised.
Yeah. All right. Any last questions, everyone? I have a question from Muhammad. It's a follow-up question, I believe. Like, what are the metric? I've been doing business for a year now and have transactions, I believe some traction with revenue, but still can't figure out the number when they talk to VCs.
Again, I'm like, there isn't a clear answer. The average is 3 to 5 million. If you manage to convince them above 3 million, that's great. But depends on which country you're in, the potential of growth. Is it a good, strong, solid team? Is the product exciting enough to this, you know, type of investor or not? So multiple aspects, but that's usually what I've seen, like 3 million, 4 million, 5 million. That's what I've seen.
Mohammed, I just sent a link about benchmarks we created. You can see if you are in a pre-seed, what kind of traction you need to have, and what kind of ticket you would raise, and on what valuation. You can look at it. I think it's helpful. All right. Well, again, thank you so much, Zaid. I enjoyed this. Very insightful.
Thank you. Thank you, everyone.
Having you in our events.
Thank you, and a pleasure. Hopefully to see you all soon.
Sure.
Thank
All
you.
right. See you. Bye-bye.